LiteFinance, the world of financial freedom.
Hello guys, it's Monday, August 22nd, and let's start the market forecast. So this week in terms of macro calendar might be less packed than usual, but still we will get some important numbers. So more important data will start from Tuesday, and those will be manufacturing and services PMIs from Germany, Eurozone, UK and US. And a quick reminder that the PMI index is a leading indicator, which means that they will show us the future prospects for the economies mentioned. On Wednesday, we will get durable goods orders and crude oil inventories from US. On Thursday, German GDP data and IFO Business Climate Index also from Germany. In the afternoon, the first revision of US GDP for the second quarter, and still on Thursday also starts the 3-day-long Jackson Hole Symposium in the US, where we might get some more information from the Fed Powell as for future rate hikes, which can be an update after a very good inflation reading. As for the symposium itself, every year it focuses on an important economic issue that faces world economies. Participants include prominent central bankers and finance ministers, as well as academic luminaries and leading financial market players from around the world. And so it is an open discussion from which we might get hints from the officials that speak on the panels. It is kind of like it was in June in Sintra in Portugal with an ECB event. So, next on Friday, we will get Japan inflation data, US core PCE data, which is the preferred gauge for the Fed to measure the inflation. And in the afternoon, Jerome Powell has a planned speech, so we will end the trading week a little bit later than usual. So market participants are looking to get a few more hints on the prospects for further monetary policy, as current analysts' forecasts suggest a roughly equal chance of an interest rate hike during the September meeting of the regulator by 50 basis points or by 75 basis points. And so in addition, gold cannot change the current trend against the backdrop of a rising dollar, which is supported among other factors by the fall in the Chinese yuan quotes. And so while the US Federal Reserve is hesitant about the pace of tightening monetary policy parameters, the People's Bank of China is pursuing an easy monetary policy and adjusting interest rates downwards in order to support the national economy after the coronavirus pandemic. And so after a significant increase in demand for gold contracts at the beginning of the month, investor activity has now somewhat slowed down, and according to the latest report from the US Commodity Futures Trading Commission, the CFTC, last week the number of net speculative positions corrected from 142.9 thousand to 141.2 thousand. And so insignificant changes have also occurred in the balance of sellers and buyers. The bulls hold the lead in the contracts secured by money, but this week they reduced their activity by 3,692,000 contracts, while the bears increased their number by 2,871,000 contracts. And as you can see, the forecast from the previous week did work out in a way. Not perfect, of course, since we got some stop hunting later, but overall, if you could set a sell stop order marked to the green horizontal line, you would be closing your trade right now. And from here, I would expect some retracement, but first we need to consolidate on those levels. So then we have the Euro USD pair, which is trading in a downtrend currently at 1.0030. On the daily chart of the asset, the price is falling within the global corridor with dynamic boundaries from 1.0240 to 0.9700. And so getting ready to test the key historical support around parity level. If we broke out of the 61.8 FIBO extension level, we could potentially stop at 100 level, which is at 0.9709 marked with a green horizontal line. And okay, that will be all for this video. Thank you guys for watching, and till next time.